Welcome back to RealPage Economy Express. Let's start with the labor market and the latest data coming in. Weekly unemployment insurance claims were little changed in the week ending January 24th. Initial claims came in at 209,000, down slightly from the prior week after an upward revision. The 4-week moving average edged up to just over 206,000. So layoffs remain contained, but progress has clearly slowed. That steadier labor picture fits with the latest update on economic growth. Third quarter GDP was revised slightly higher to a 4.4% annualized pace, up from 4.3% and stronger than the 3.8% pace in the second quarter. Consumer spending grew at a solid 3.5% rate, while underlying private domestic demand increased 2.9%. Trade data moved sharply in the opposite direction. The U.S. trade deficit surged nearly 95% in November, driven largely by a wider gap with the European Union. On a year-over-year basis, the deficit through November is running about 4% higher than last year, showing tariffs efforts have not yet narrowed trade imbalances. Turning to housing, contract activity softened late in the year. Pending home sales fell 9.3% back in December and were down 3% from a year earlier. All 4 regions posted month-over-month declines, with the Midwest and West seeing the largest drops. Mortgage data helps explain that slowdown. Applications fell 8.5% the latest week as rates moved higher. Refinancing activity dropped 16%, while purchase applications were little changed on the week, but still 18% higher than a year ago. Home price growth also continued to cool. The Case-Shiller National Index rose 1.4% year over year in November, matching October. With inflation running higher than prices, real home values declined. On the consumer side, sentiment edged higher. The Consumer Sentiment Index rose to 56.4 in January, the highest reading since August, and year-ahead inflation expectations eased to 4%. Now, that improvement was not reflected in confidence data. The Consumer Confidence Index fell sharply to 84.5, the lowest level since 2014, with both current conditions and expectations weakening. Now, inflation remained relatively contained. PCE rose to 2.8% year over year in November, with a 20 basis point monthly increase. Producer prices also advanced, rising 50 basis points on the month and 3% over the past year, driven largely by services. Finally, the Federal Reserve left its policy rate unchanged at 3.5% to 3.75%. FOMC officials upgraded the growth outlook and downplayed concerns about labor market softness, signaling a likely pause in further rate cuts. In addition, we learned earlier today that Kevin Warsh has been nominated to succeed Jerome Powell as chair of the Federal Reserve. Stepping back, growth remains solid, the labor market is cooling gradually, inflation is somewhat contained, housing is adjusting unevenly, and policy is on hold. Thanks for watching RealPage Economy Express.